Okay guys, you can see this is stock number 1. We went with 4 lakh capital, but it was a low risk high reward type setup. I'll explain it in the video, but this was a type of setup. Now let's refresh this one. This is stock number 2. We'll have a 2 lakh deployed in this one, but this was a better setup, although risk was almost equivalent, so I went with a bit less quantity in this. Now let's get right into this particular video, everyone. So let's begin the session, and I'll be talking about this stupid simple strategy in this video. You will think how easy it is to make price action work, how easy it is to do swing trading in Indian stock markets if you have all the key concepts aligned, if you have the confidence. Okay, so the important things you need to understand in this video will be key levels. What are the key levels? Now, for my particular type of setup to get activated, we need some different type of time frames, like a daily time frame, it could be a weekly time frame, it could be a monthly time frame maybe. Okay, so daily time frame, weekly and monthly, these are the 3 time frames I trade on. Then we need key levels. Key levels can be a good supply level, which used to be a resistance level. Okay, resistance level. And then after a breakout, after a strong breakout, the markets are trading at a demand zone, at that demand zone. So this is a key level. We need to focus on these key levels, right? It's pretty simple. Whatever used to be a huge supply, now it's trading as a demand. Okay, that's a key level for me. Then we will talk about equilibrium levels. Equilibrium levels, I'll tell you how to create them in this video, and it's pretty easy. We just need to see if the stock is trading above that equilibrium level or not. If it's not trading, not on my list. If it is trading, good. Then we need to identify where are the peaks created by the market. Peaks like, for example, this. We'll talk about my setup when we go into the setup in detail. Then you will understand. So this is the peak of the market. The market went higher and higher, and after this it created a lower low. So mostly after whenever you see a peak in the markets are going to create something like this: higher high, higher low. These are not peaks, these are just higher highs created by the market, and then comes a peak where the market finally breaches the structure. That means it creates a lower low here, right? So that is the peak of the market. That's how I identify them. Then we'll talk about the consolidation phase. Consolidation phase means after this peak has been created, mostly the stock is not able to regain those peaks, which is actually good for my setup, actually good for the strategy. It goes into a sideways phase. This sideways phase is mostly known as consolidation phase, where the trend is still now. Okay, there is no uptrend, there is no downtrend here in this area. This zone is known as consolidation. Then we'll talk about manipulations. Manipulation means that the market creates a lower low and then comes back up inside this area. That means it was trading at an area, it gives a breakdown of that area and comes back inside and tries to move towards the higher side. So the market is trying to manipulate everything, right? Then we'll talk about the higher lows. That means it's something we'll talk about while telling you what's happening inside the setup. And then we'll talk about the counter trend line breakout. There is always a counter trend line that's been made, and eventually at the end of it I will do the confluence. That means the confluence finishing. All the things will be right in front of you, and you will be able to see the whole setup, and then I will take the entry right in front of you. Already you guys must have seen the PNL in the starting. That's where my entry and exits are. I've booked around 60k, 65k I guess. Make sure you subscribe this channel, guys, because we are now going for 11,000 subscribers on this YouTube channel. All the charts, and I'll make sure all the charts in this video are 3 months or older, and none of them, no, all these trades that I'm showing you, they are already been booked in the past. So I'm following all the rules. I'm not showing the symbols of the stock. I cannot show right now. Okay, now let's move on to the next part. Okay, so first is the key level. Right now, right here, if you see, what is the key level that you guys are seeing? So if I make the price action in this manner, you will see that this is a supply zone. Let's make the supply with orange color so that you understand that, yeah, this is a supply. I'm taking this wick and this closing, Okay, I could have just taken the closing as well, but if you make it like this, you have to consider the wick as well, because that is also a part now of the supply zone. Now you keep on extending it towards the future, and the future looks like this, right? Like this, somewhere around this area, where you can literally see that the price is struggling to come down now. After a breakout towards the upside, after the breakout towards the upside, the price is struggling to come towards the downside, only to go towards the higher side. That means the price is now bullish for the levels that are above this. That means the price is saying that we have given a breakout of this level. Now I'm just going to clone this level here, and now this level, after this breakout and retest and a continuation model, right here, if you see, the price is continuing above this level. It used to give extreme resistance in the past. If you see, multiple resistances, once, twice, thrice, 4 times, right? And then finally it was able to sustain above it, right? So I am going to call this a demand zone and make it with green. So now this demand zone is our key level. So this whole zone is our key level. That is important. Okay, now the second thing here is the equilibrium level. Now how to create the equilibrium level? Pretty easy, pretty simple. Everything about this strategy or this price action that I'm telling you is simple. So you need to open a Fibonacci here, that is this third tool. Go to the Fibonacci retracement. Now here, click on the bottommost point and towards the topmost point, that is the swing low and the swing high of the whole move during the formation of the supply and demand zone. Got it? And you need to mark a 50% area right there, like this. Okay, now I also have one more tool to directly give me, now if you remove all the fluff on that Fibonacci, the 30%, the 60% golden ratio and everything, it'll come up with something like this. Okay, and this looks pretty clean, that's why I use it as my equilibrium level. Now here, if you see, that is my equilibrium level at 50%. Now if something is trading below this, I'm not going to trade that, I'm not going to enter it. Okay, and something is trading above this 50%, that's on my green list. So we have two things done on our list here. Let's take our list to this side. Okay, key level done, supply demand, stock is trading above it. Equilibrium level, stock is trading above it, right? And peak, is the peak formed or not? Let's see, let's zoom in. Now two things are done, and here if you see, the price was going higher high, higher low. So can we call this a peak? No, until this is been broken. So yes, there is a lower low, so we can call this as a peak. But then again, price goes higher, right? There is a manipulation here, price goes higher and creates a higher high. Whenever the price is making higher high, higher lows, you cannot call them a peak until it makes a lower low. So again, after that, there is a huge dump here in the price, and you can literally see this low being broken. Now what happens after that? The price goes even towards the downside into the supply demand conversion zone that I have created for you right there. Okay, now this area tells you that this was the peak of the market. We can literally identify the peak in that manner. Okay, easy to identify. So that is the peak of the market, and now I am going to name this area as my peak. Can we write it as peak? Definitely we can write it as the peak of the market, right? So that's the peak of the market created right there in front of you. Now we have a equilibrium zone, let's call it EQ 50%. So stock is trading above that. Let's name this area as supply demand conversion zone. Okay, so we have a supply demand conversion zone, we have a peak created here, we have a 50% equilibrium created here. Okay, everything is set. Now what's left? Let's see what's left. So that's right in front of you, the levels and everything. Key level, equilibrium, peak, consolidation. Now the market's in consolidation or not? Yeah, it comes back inside, consolidating. There is no trend here, created a downtrend, then created a uptrend, sideways. Okay, so it's in a sideways consolidation form. After the peak has been created, higher chances of consolidations and manipulations in the market. So second thing is manipulations, and then we'll see higher lows, counter trend line breakout, and confluence. I'm removing this list now. Keep this list at the back of your mind now. So right here, if you see, that's a manipulation leg, and that is what we wanted. The market creates a low here, a beautiful low right here if you see, and then after that low it gets broken by this leg, lower low, and then it creates a higher high, higher low, and then again the market is in this area. So now overall if you see, we are trading in the supply demand zone, right? This whole area, I'll be calling this as one consolidatory leg right there. So let's mark that with white, and this as one leg. So if you see it that way, you will be able to identify that this is a low of the market, and then this is a higher low creation of the market. Now the next thing is counter trend line breakout. So we saw the consolidation, we saw the manipulation happening at this area, market comes back inside, and then we will make the counter trend line in this manner, right? So we have created a beautiful counter trend line. The markets have respected this counter trend line multiple times, and finally the stock, if you see, has given a breakout above that area. Not only that, if you see, not only that, there is a beautiful higher low being created. Now where is this thing happening, exact thing happening? Above the supply demand zone, below the peak, above the equilibrium 50% point, creating a higher low, and then giving out a candle breakout of a counter trend line. Counter trend line means there was a trend towards the market, and that trend was upside, and then it went into a sideways towards the downside, means a kind of a slight bearish consolidation, means downtrend. And when we say counter trend line, it gives a breakout of that counter trend line, meaning it is breaking towards the higher side and going into the trajectory of bulls again. Could be a rally towards the higher side, but not to miss, there are some more things. For example, like my hidden trend line. So this is my hidden line right there, and if I just clone this line right here, it will be a parallel channel that most of you will miss definitely. So what was my risk in this particular trade? A very small risk of 4% and a target of 8%, as you can see in the PNL also in the starting of this video. 8% to the 4%, and let's see what happens afterwards. 1, 2, 3 and fourth day the stock goes on to a 5% circuit. But see, I'm not that type of person who sees if the stock is in a circuit like a 10% or a 5%. Okay, see, a 20% circuit is good, but next day if the stock is giving you a 10% or 5%, that means the circuit limit has decreased. Previous day if you see, the momentum was good, but now the stock is changing its circuit limit to 5%. That means something might be fishy going on in the stock. I try to remain away from such type of stock, so I have exited on this move right there. I don't assume the price to move higher. Also, there is a channel there. Let's see what happens to the channel. So I have exited the trade, booked 35k in this one trade. Let's see what happens. It goes higher, traps a lot of people, touches the higher area here, but definitely gives a strong rejection. Now price moves towards the downside, and not only towards the downside, it just goes back to the bottom. Most of the people might have hit their stop losses, but now it is following this parallel channel. So yes, it was pretty easy. It was right there in front of you. It's just a matter of where you are entering, where you are exiting, how much you're making out of this pretty simple stupid strategy right there in front of you. Okay, now let's get to the second one. Okay, so this is the stock number 2. We have booked around 25k right in this one as well. So right here, if you see, the setup was and why I went with less capital. See, in that particular stock, if you see 4% risk, that means I'm risking 4 lakh. I'm putting 4 lakh. That is only 16,000 rupees in a single trade. If you see here, this stock, I will tell you the setup, but before that, the risk management is much more important. If you see the candle's length, it is almost 10%. So if I risk 4 lakh in this, that's 40k. Can I risk that? No, I cannot. That's not my risk appetite in one trade. Now, if you see, I am more focused toward risk management in every single video, because literally it can change your game. Right now, if you see, I'm not getting that many setups, so I'm just sticking to my A+ setups, sitting silently, waiting for the best trade to enter, and I will bang it. Percent risk, that means I can put 2 lakhs in this particular stock and get a 20k risk. Now 20k in this, 16k in that, total of 35 1000 rupees of risk in 2 trades. Okay, that was my target, and how much I made? Almost double that, 1:2, 70,000 in these 2 trades, right? Now, getting to the overall setup. Now, if you see again, one-sided move, and if you see, this is the kind of a low from where the market actually started moving toward the higher side. I'm going to make an equilibrium from this area because the markets were sideways here, and then it jumped suddenly from this point to the area at this point. Now, if you see, beautiful equilibrium created by the markets. I will mark this equilibrium like this. Markets are trading above that equilibrium point, right? From the low to the high, and then we will make a supply zone here like this. Now the markets were trading in a beautiful supply zone until this breakout. After this breakout, the market sustained this area. Now I will simply copy this line. I'm doing exactly same thing in this setup as well. If you see, going with the green here. Okay, so the stock did give a green. That means supply demand 50%, everything is good. Now, is this the peak of the market? No, this is not the peak of the market because it definitely gave a higher low here and then went to a higher high. After that, it gives a lower low and a lower high. Lower low accompanied by a lower high, and then you see a lower low again. That means a downtrending structure. That means this is a break of structure here and then a lower low, lower high formation. You go and say that this is the peak of the market right there. So I'm gonna go with the same thought process here, that this is the peak of the market. You can write these things for your own reference, maybe completely depending upon your ideology. This was my level for equilibrium. You can write it for your own. When you are trading, you need to understand that if something is written on your screen, it's actually good for you later on. Okay, that yeah, this was the peak, so that you again don't have to go back on multi-time frame and check what's happening, right? Now if you see, this is a good manipulation leg also. After creating this peak, the market gives you a lower low only to give a lower high here, manipulates and goes sideways. If you see overall movement here, it's sideways for a really long period of time. Here if you see, market started from this area and it went higher, higher low, higher high. So overall if you see, this is like this, a upside movement. If you just take out the mean of this movement, higher high, higher low, higher high, higher low, like that. If you go with this movement here, from this point to this point, it's literally a sideways market, although it went high low, but overall sideways. And here if you see, overall from this point towards the higher side, it's only going to the top. That means what is the first point, what is the end point, right? And if that first point and the end point is like this, it's sideways. So market went sideways here. You need to identify all these, comes through experience only. And then if you see, this is a lower low created by the market only to give a higher low and a big candle here. So I only wait for the big candles. Now here I'm going to throw a counter trend line like this, beautiful counter trend line. Let's make that with red. Now that's a counter trend line, but not only the counter trend line was being made here, I am a fan of creating hidden lines, as I made in the last one also. So that's a hidden line for me. I can name or write it hidden lines. So let's make it to the middle, right? And to the center, and maybe with white, a bit bold, 20. Okay, so that is good, right? Now that is my setup right there. I'm going with a 10% risk here in this particular stock. 8% to 10% could be anything goes good, but my target for this particular stock would be around 11%, as you guys saw on my Zerodha console as well. 11% risking 8%, 1:1.4 risk reward ratio. Sounds good for a swing trade, and let's see what happens afterwards. Now you can see quite a consolidation here, and then finally we get to the target. Okay, it gives me somewhere more above this particular target. Okay, but there that's where I have exited, because initially my hidden line was at this area, and it definitely could have given me some 15-16%, 3-4% more movement here, but I have exited at 11-12% around this particular part of the price action. Now let's see what happens later on. The price gets rejected multiple times, and finally it goes down to the demand, breaks the demand to the equilibrium. What happens at the equilibrium? Takes support at the equilibrium, and trading around that area. Okay, so see how beautiful this price action looks like. Okay, I literally created this right in front of you. I've traded it, shown the PNL to you guys. This is how easy the price action is. If you learn it, practice it over years. Okay, still I was practicing, so it's been 3 to 4 years of charting, practicing. Okay, that made me do this magic right in front of you. Okay, so that's how I booked around 65 to 70k profits in 2 stocks. I hope you enjoyed this video, and it was simple stupid strategy. New to this particular channel, this is my Telegram right in front of you. Guys can follow me on my Telegram. I won't be giving any calls or tips, and definitely all these things are my updates, what's happening over. Right, also my book is coming, so stay tuned for that. We'll see you in the next video. If you have not subscribed this channel, make sure you hit that subscribe button right now. Let's go for 11,000 subscribers. Good luck.